Good morning. It is Tuesday, May 28th, and it feels like a Monday, but it's a Tuesday. There's a whole rant about this between Newman and Kramer on Seinfeld. Thursday doesn't have a feel. Wednesday doesn't have a feel. But, Tuesday doesn't really have too much of a feel either, even though it's kind of a Monday. So great Seinfeld rant. Love it. It's low energy, Gary. My apologies to the paid newsletter subscribers. I think I've got mono. I don't know. I don't even know what to do for mono. I'm just so low energy for the past few days. So I got sucked out. I'm not sick. I just spent the weekend on the couch, not doing much at all. But I am going to give you, in the first 5 minutes, my entire system. So if this is your first time tuning in, here's my entire system and the tools that I use, okay? And I used it to look at Motley Fool's top 10 stock picks, what I think of them. A few weeks ago, I went over Alpha Picks. Alpha Picks portfolio, fantastic results, 122% versus the S&P up 35% at the same time. Now, what do you use these for? You use them for idea picks. You use them for to create a portfolio. So if you want this Motley Fool top 10 stock picks on the Daily Stock Pick newsletter, this is the newsletter that you want to read. The newsletter during the week, completely free. On the weekend, I give a little bit more analysis. I take a lot more time in writing these things. There's a lot more thought involved. And so what I do is I give people value. Over the past 2-3 weeks, you've gotten 15 picks between Alpha Picks and Motley Fool. These are subscription based. So, paying for my newsletter, you get the benefit of both subscriptions. But here is how I use the tools that I have to look at these things. You use Trendspider. Here's Trendspider. This has my 4-hour algorithm. This has the 65-minute algorithm. I even give you a 5-minute algorithm that has an A+ entry. You just have to sit there and watch the charts for the exit. The exit, I've had a little bit issue actually finding a solid technical way to exit that beats buy and hold for any short-term period. But the 5-minute absolute A+ entry setup. And that was a paid newsletter where I created that and it got it. So Trendspider, if you want Trendspider, go over here to the link tree. Click on this top link. And they're having a special. It's going on for another day. They've extended it one more day. And it's $48 a month. You get 6 months for free, $582 for the year. It's an enormous, enormous savings, $48 a month. Now, the Enhance is $54 a month. So I would get this one over this one. Look at the price difference. It's marginal. This one is far better. You get 75 alerts, 30 trading box, 10 workspaces instead of 1 workspace, 10 trading box, 25 alerts. This is just a far more enhanced version. So this middle one, far better for you to get. But Trendspider, it has my 4-hour algorithm. Okay. So the first thing that I typically do when I find a new stock is I go here and I look at this, technical. Okay. Do I want to trade this one right now? Well, let's look at the Qs for instance. Well, here's the Qs. We said old resistance turns into old support turns into new resist or old resistance turns into new support. This was the previous all-time high, which you can see it bounced up a couple of times back here in April, and then we shot down, and then it just powered right through. This is your new support. So 450 is your new support. And you can see we didn't quite come down to it. We tried, but we didn't quite come down to it. That was the day, the afternoon, May 23rd, where it was a horrible, horrible day. That's it. That was Thursday. Friday, we're fine. Pre-market, we're up 0.23. Your MACD, super high. And again, this is a 4-hour chart. Super high. Your RSI, super high. At some point, we should be turning back, and the buyers should not show up. The sellers should show up. So that's your first step. Again, in 5 minutes, I'm going to teach you my entire system. Second step is Seeking Alpha. And this is the 20% off your premium membership. You get 20% off. How? You go to the link tree, and it's your second link. 20% off. So for about $500-600 a year, you're getting both the main systems. And if you go over here to Seeking Alpha and we put in QQQ, say you're interested in QQQ, even though you see that, hey, it's an ETF. I don't know if I want a tech ETF, but it's outperformed every other index for the last 20, 30 years, whatever it is. But I want to see what it's really about. Well, you have the quant here, and here's the ETF grades. Momentum, it's got an A+. Expenses, it's a B+. A little bit more expensive than some. Dividends, B+. Risk, it's a C. Liquidity, A+. This is one that's not going anywhere. Well, let's see what the holdings are. You can go over here to the analysis, and you can go to the seasonality, even see the seasonality of this one. And you can look at the month. Well, May, it's a 70% win rate over the last 10 years. June, 60%. July, this is a 100% win, and we played it last year for a nice, I think, 14 or 15% gain. We bought TQQ at the beginning of the month, which is a triple levered ETF, and we sold it at the end of the month for a great, great win. It's 100%. So do you want to buy Qs in May? Well, maybe, because your win rate in June and July is so good. And then sell it in August, because September sucks. September absolutely freaking sucks. But do you want to buy it? Yeah, maybe you do. So, you look at that. And then you can see what the bulls and the bears are saying. You can see what Seeking Alpha analysts say all about it. You can see the fund details, holdings breakdown. It's technology, 50%. You're diversified in this one. Again, it's heavy technology, but you're diversified. Look at the top 10 holdings. Microsoft, Apple, Nvidia, Amazon, these are all killing it. Dividend, 0.53% annual payout, $2.42. So for every share you get paid $2. Look at the dividend growth history. And that, if this were a stock and this was the earnings, you'd be killing it. So again, this is how you use the system. You go to Seeking or Trendspider, and then you go here. Say you don't like QQQ and you want to find something else. Well, let's go to the peers, because Seeking Alpha teaches you this too. You have IWM, which is the Russell 2000. You have IVV, which is the S&P. You have an Ultra Pro Short. I don't know why they're putting the Ultra Pros in here. You don't want those. But QQQ, IWM, DJIA, whatever, you can find any of these indexes in Seeking Alpha and look at that. If you want to do charting in Seeking Alpha, you can do that too. Let's just select a symbol. Let's do IWM. DIA, I think is what it is. Yeah. Industrial Trust. That's the Dow Jones. And let's do SPY. Or you know what? I'm going to do VOO, because I prefer you'd buy VOO instead of SPY. If you're doing options, I would buy SPY. But if you're doing just regular, hey, we're going to buy and hold, this is what you want to look at. And look at this. You can do, and this is free, by the way, at Seeking Alpha. Use my link. You can get most of this stuff for free. Then you go 3-year, and then you go 5-year, and you take a look at these things. Well, what's been the number one? It's QQQ. So again, we take a look at this and we find that, hey, QQQ is a pretty good value here. So you've used those two things to really look at QQQ. Again, charting and then fundamentals. That's my entire system. My entire portfolio management system. My entire finding stocks. Finding stocks, I can use alpha picks, which we talked about. These are original ideas from Seeking Alpha. Again, there are two different subscriptions from Seeking Alpha. There's Seeking Alpha Premium, where you get 20% off, and then Alpha Picks, where this link saves you $50. It's 10%. So again, there are two different subscriptions. If you were to just get one, if you want to do the work, get Seeking Alpha Premium. If you want to see every quant, if you want to see every stock, do Seeking Alpha Premium. If you just want 2 data-driven stocks a month. The last one I think was Bluebird. Then we had GM. Then we had GTC. We had a bunch of them this year that have really, really taken off. Some not doing so great, but again, it's buy and hold. And they tell you when to sell. And the portfolio is doing great. So there's my system. In the first 5 minutes. If you don't want to listen to the rest of this podcast, do not. But that's my entire system. And my suggestion would be to subscribe for free to the Daily Stock Pick newsletter. And again, that's over here on the link tree. It's down here, but it's dailystockpick.substack.com. You can see I post everything for free. Just go to the recent posts. If you can't read it because it's a paid post, just go to the recent posts and look at the most recent ones. What I post at the end of these is I post the 4-hour algorithm. We can look at these. 523, NVIDIA is a buy. We can take a look down here. And you go down to the end of the newsletter and you'll see there's a section called scans. Those scans are stocks that are showing bullish behavior in my 4-hour algorithm. The 4-hour algorithm can be yours, and you can see these entries and exits here. The Qs, I get you 52% against a 53% buy and hold over 2 years. Now, you say, well, that doesn't provide me great solace that you're just meeting the buy and hold. But you know what? Some people can't sleep at night. If you want to protect yourself against the COVID downturn, that's where the 4-hour algorithm really helped. This is a weekly chart. And during this period of 2021 down to October 2022, where we hit the bottoms, it kept you out of a lot of this. And so during this period, during 2021, 2022, it outperformed buy and hold. Why didn't it outperform buy and hold now? Well, when you go back 2 years and you go back to October, say you go back to, let's see, right here. This is May 2022. Well, look, we didn't have a huge downturn. We had a nice upturn. Then we had a big downturn, kept you out of that stuff. But we haven't gone down. We've gone up. So some people can't sleep at night. Your risk tolerance is different. The 4-hour algorithm helps provide you something that takes emotion out of it. And again, if we go down 10%, you can see that's about 406. We will break through that support level of 450. And that's what I'm trying to help folks understand is the technicals and the fundamentals can help you both. So there you go. And this weekend stock pick, the 10 stock picks from Motley Fool, I go over them for you. Now, my portfolio, everybody who listens for a long time knows Apple. Apple's iPhone shipments in China soar 52% in April amid discount strategy. They will most likely be hurt on revenue, but most likely it will help their total earnings per share. They're buying back shares. We know that. So what's the previous all-time high? 198. Where are you right now? 192. This has been just a rock-solid performer since the earnings gap up. You had a little bit of an earnings retracement, but since then you've gone up. You do have confirmation. Algorithm still has you in. If you bought in the algorithm down here at 169, you're doing great. You're doing great. Again, this part didn't keep you out totally. There is no algorithm that is absolutely perfect and wins 100% of the time. You only win in Apple 30% of the time, by the way, but your average win is 10%. The algorithm makes you 46% against 32%. And you take this news story from Seeking Alpha, you go over here and you take a look, and do we have more upside? Yes. Is the upside huge? No. This is resistance. So if you were to buy at 192, I would say 198 would be your cap. Is it worth buying? The MACD, super high. We're crossing down. I'd expect a little bit more downside. Again, a catalyst with news like this pushes it up. June 10th, they have their WWDC conference, which they will announce some AI kind of stuff. If it doesn't blow the street away, then this will fall. That's what you have to worry about. Is it hitting this and then falling? So Apple, it's in my personal portfolio. I love it. Let's talk about what the week ahead looks like. Tuesday, you've got all of this volatility. Earnings, we've got Kava after the bell. Kava is one of the big movers today. It's moving before its thing. Shareholders with Hess will vote on the acquisition offer from Chevron. That'll be a big mover. Tomorrow morning, you have Dick's Sporting Goods. You've got Salesforce, Chewy, HPQ, Pure Storage, Capri Holdings, Okta, C3 AI, Abercrombie & Finch. We'll look at some of those things. You've got M&A Watch. Capri Holdings reports earnings, although the company is not holding a conference call due to the pending Tapestry deal. Again, M&A Watch. Pershing Capital Management will hold an investor call. The hedge fund's top holdings are Chipotle, Hilton, Worldwide, and restaurant brands. Tuesday, this is all from Seeking Alpha. This comes out every Friday. Earnings Watch, you want to take a look at that. on Thursday. And then Friday, what do we have? We have tons of economic data this week. The core PCE index will for April will be released at 8:30 on Friday. At 9 o'clock on, let's see, notable investors, New York Fed President John Williams will speak. We did have some Kashikari speaking this weekend and stuff. But again, this Catalyst Watch newsletter, you can go and look at every day what you want to see. Now, GameStop was interesting. And if we go and we look at GameStop, and I want to pull up after hours with GameStop because it is absolutely soaring. It's at 23. And this story kind of puts it into perspective. Shares of GameStop are gaining altitude Tuesday's pre-market and meme-fueled momentum. The company disclosed Tuesday it had completed 45 million shares, sale of 45 million shares with 930. They diluted shareholders. They basically sold a ton of shares, 45 million shares, to gain nearly $1 billion. Now, why is it up? Why is it up? Well, there's a couple of reasons here, and we'll go into the 5-minute A+ setup. And do you want to trade this one on the A+ setup? Well, I don't know. Again, my risk tolerance different than yours. But if you want to do it with a plan, do it with a strategy. This gets you in during what I consider to be A+ setups. Look at this. This right here at $17, it got you out Friday afternoon with an 18% gain. 18% gain. Hasn't gotten you back in. And the reason it hasn't gotten you back in is mainly the RSI. And I will tell you because it's overbought. So do you want to take the chance that this one is going to crash? The only reason this is going up is meme. The fact that they got $1 billion doesn't change the business. It does make it a little bit more attractive to buy. But until they tell us how they're going to use that $1 billion to actually enhance this business and make money, this is a worthless stock. So if you want to trade it on momentum, trade it with a plan, trade it during an A+ setup. And again, this one, it got you in here on May 24th at 10:30. It got you out with a little 0.21% loss. Because even though this was an A+ setup, it wasn't pulled up by volume. Where was the volume pulled up? Right here after that 1796 buy, 18% gain. I talked about earlier buying Trendspider. This is worth it if you're trading GameStop. If you're trading GameStop, this amount of money to spend $48 a month and you're trading GameStop, get it with a plan. Get it with the 5-minute. Again, we talk about it all the time. You have to have a plan. Now, on the 4-hour, GameStop doesn't work. It got you out with a nice 104% gain here, but this is just luck. This is just all meme. Would you have gotten in here at 14 back in January? No. Would you have gotten back in here at 14 in February? No. And look, you're absolutely losing money. Do I suggest it? Absolutely not. But if you want to do it, trade it with a plan. Now, here is Ross Cameron. Here he talks about how to read supply and demand zones on candlestick charts. It's a beginner. It's 45 minutes. It is fantastic. This will be linked in the newsletter. This is a great video from a master. If you don't know, Ross Cameron took $100,000 to $10,000 to about $10 million. He provides fantastic courses. He's got free YouTube videos, but he does provide courses. I would not suggest buying the course unless you're absolutely into momentum trading. And if you don't know what momentum trading is, do not buy his course. Again, you have to understand these things. Here, back to Seeking Alpha. You can see COPX. This is an ETF for copper. Copper prices expected to quadruple on soaring demand. Top commodity trader says. Now, understand, most of these traders talk their own book. When they buy into this stuff, they talk their own book. But copper has enormous demand, and you can find ETFs to trade it. COPX is one. This is the copper miners. And again, we talk. When I talk about AI, they always say, "Do you want the picks and shovels, or do you want the actual software or the things you can't see?" Picks and shovels, the miners, copper. Again, it's probably a pretty good bet. Another Ross Cameron video. If you don't know how to read candlesticks, this is a master class, and it is free. An absolute master class, and it's free. I'll link it in my newsletter. It's Warrior Trading. It's not mine. But he does it really, really well. if you're looking at this chart, let's just take a look at Apple, and you're saying, hey, I don't know how to read these candles. I don't know what these candlesticks represent. I don't know what all these lines are on the screen. Ross teaches you. He teaches you how to read candlesticks, what an inside candle is, how to determine trend from candlesticks. He teaches you all of these things, and it's for free. So take a look at it. I did put in my newsletter, I'll put a couple, some AI plays, cybersecurity, Pan W. I think an underloved AI play is IBM. Now, I'm not buying this one. This one doesn't fit my investment thesis. And my investment thesis is typically growth. IBM is not growth, but it could be considered growth in the sense that they are probably one of the top AI. They had Watson on Jeopardy way before AI was cool. They have made a couple of big acquisitions in the AI space. Now, do I trust this one right now? I would say do not buy this name. This is the name right now that you can see on their earnings. They dipped down. It started to cover this gap. It's got weakness. Again, if you don't know what these candlesticks mean, go and watch Ross's video. You've got a death cross here. If you don't understand what I'm saying about some of this stuff, then you want to go over to my to the Daily Stock Pick newsletter, and you want to take a look at this education center right here. And I put in everything that I say about button hooks, about death cross, Bollinger Bands, MACD, algorithm, everything is in there. But what do I see here in IBM? It is an underloved play. And when we take a look at the weekly, this is what I want to point out. We've seen this one pop all the way up to 196. It has pulled back. And the MACD is kind of coming down. When it reaches the oscillator, I think that might indicate a buy. Right now, you're looking at 3 weeks of pretty good upward movement. Your 50-day still moving up. Your Bollinger Bands are cinching up. They're contracting a little bit. That typically means, and when you go back here and you look at the Bollinger Bands, when they contract a little bit, what does that mean? That means you're going to move in a direction. Where's that direction? Don't know. Have no idea. But you can take a look at these candlesticks and understand the direction. So that's an underloved one. Chips, NVIDIA, and AMD, I think those are significant. There's a couple of power names that you want to look at, POWL, CS, and VRT. I'll put those in the newsletter. But again, candlestick charts, great. This is a fantastic thread. This is a thread on the interview with Stanley Druckenmiller on CNBC, and he went over a couple of things. He went over why he's invested in Argentina, why he's not invested in China. This is just a great summary, and it's 6 slides. It's 6 freaking slides. So go to find it on my newsletter or find it on my Twitter, and you can see it. Now, a little crypto news. Bitfarm jumps after rejecting a $2.30 share offer from Riot Platforms. Bitfarms, these are all miners. So my particular miner that I do like and I still hold, and I hold at a much higher price, and I haven't gotten back in, but I probably will get back in. And the reason is because I do think we're in between this trading range right here. And if you look at a weekly and we look at this trading range, we're at the bottom of this range. Well, that bottom of that range goes all the way up to 83. Now, I do think that the range is probably 30 on this one, but we've seen nice movement of this. The RSI in no man's land at 54, MACD starting to cross up. Maybe this week is one that moves. When you get news like this stuff starts to move, and you can see Riot's up 4%, Bitfarm's up 3%, and Bitfarm Canada is up 3%. Pineapple Energy. Now, solar has just been a sector that is unloved, but PEGY, this is a penny stock. This is at 29 cents, but that's up 65%. They secured a New York solar project. This is crazy. Now, this is not one that I would personally get into, but when you take a look at this 4-hour, it's got you in at 14 cents. Boy, that's a great one. Now, tops, I would say you're right now at 32 cents. So it's down since pre-market. If we go to the 5-minute A+ setup and we take a look at this one, again, you have to know which algorithm you're going to use to trade. This one makes you 57% over 5 days. Now that's with this exit. With these exits, it makes you fit. Over 5 days, you made 57%. Buying and holding this one made you 26%. Now, you're in at 22 cents. You're up at 32. Do you want to sell? I would probably be looking at this one to sell. Reason is MACD super high, RSI up here. I want to sell into strength. Do I think that this one's going back to 60 cents? Maybe. It could be. I mean, if you look at a weekly of this one, look at this. You've got a gap all the way up to 44 cents on the weekly. So the valuation isn't there, but I bring this up in that, hey, just determine which strategy you want to use, whether it's the 4-hour, whether it's the 5-minute. Trendspider, I give you all of those options. One that I personally own that I think is interesting is an online betting operators jolted by tax legislation in Illinois. This is a proposal for taxes on sports betting. They proposed a 35% increase. Now, DraftKings is my preferred. Hey, let's just go in and play this lottery kind of stuff. Should have gotten out. I didn't get out. I think I'm in at like 26. So I'm still holding down here at 30 was the old resistance. Old resistance turns into new support. Do I think it probably get down to 30? I don't know. But that is an overreaction in a stock that was already falling. Overreaction. Again, that 50-day probably bounces off here. I don't think this is a bad play. Let's go to, over here to Seeking Alpha. And we'll take a look at DraftKings here. It's a buy in the quant. Valuation, D+. Again, it's expensive. Profitability, they're not doing great. It costs them a lot. Momentum, though, A. Revisions, B. When we take a look at the revisions, 13 over the last 3 months, 90 days. 13 analysts have taken them up. 4 down. 28 have taken them up on revenue. Nobody's going down. So everybody thinks the revenue's going up. It's just the earnings per share. This is kind of interesting. I mean, again, if you want to buy something that maybe has come down a lot, 52-week range, we go up to $49.57. You're at $50. This on a positive earnings, this could easily go to $60. Now, your earnings already passed. You don't have a catalyst. So all it's got is bad news. What do you have coming up as far as sports go? You have the NBA Finals. You have the Stanley Cup. You got golf. People are betting on golf. I saw this weekend ESPN. When ESPN was covering the Players Championship last week when Scottie Scheffler got arrested, there were bets on who would win, who would make the fairway. ESPN bet was huge all over. So if you don't think DraftKings is in that game, I think you're wrong. Again, I think that one's a good one to bet on just based on any reaction in the market is an overreaction. Now, CrowdStrike gains. Morgan Stanley sees it topping $100 billion valuation. This is kind of interesting. Fodderwala, who has an overweight rating on CrowdStrike, boosted his price target to $422 from $372 ahead of next week's earnings. If we go over here to a 4-hour algorithm and we look at CrowdStrike. Now, I do own CrowdStrike. I think I bought it as it dipped under 300 because I wanted to get more exposure to this name. I am in Palo Alto Networks heavy, and I am happy with Palo Alto Networks. I think they recorded a great quarter. This one, a little bit extended. Again, 422 is what the guy said was the price target. If we go over here and we look at the Wall Street analysts, we can see that the consensus price target for CrowdStrike is $398, 13% upside. You're at $351 right now. Now, there's 50 analysts that cover it. 33 say strong buy, 13 say hold, 13 say buy, and 4 say hold. You can see in the quant, it's always just been a buy. Right now, it's a hold. It's an F on valuation. That's the only F. So I don't think that this one's a bad one to get. Do I want to buy it at 347? Algorithm got you in at 300. Your average win here is 13.39%. So let's see where 13% is from 300. It's up here. You're already up, 16%? Would I buy it here? No. MACD's high. Algorithm's above it. You've got this trading range that you're in where you're at the top of it. In my mind, I just don't think that the valuation presents itself well enough to buy it. Wait. You might come down. You might come, the 50 days bouncing off. You might go up because this one has just been a rocket ship up. Ever since January 2023, where you were trading at 97, 97, you're almost at 400. That's a crazy, crazy move. MACD crossing up again. If you want this one, get it. I just think it's a little bit stretched. Let's go to Earnings Hub, because this week we can go and look at Earnings Hub. I'm going to get rid of the GMed thing. We're going to take a look at this week. Today we have Kava. Kava was moving in pre-market. I don't know what it's doing right now. It's up, I guess, 1%. Estimated 4 cents per share. What they released last time? Last time previously reported was 2 cents per share. So they're growing, and they are growing. 177 million in revenue compared to the expectation of 245. This is fast casual dining. I'm not a big fan of it. If you want to play it, I think it provides some pretty good movement. Dick's Sporting Good tomorrow. We can talk about this one. Reported $3.85 last time. Expected $3. It's tomorrow morning. 2.93 estimate. They brought their stuff down. We can take a look at DKS. This one provides pretty good movement on the stock chart. A lot of volatility. For a retail name, you can usually do pretty well on the surprises. Now, since its last earnings, we talk about earnings gaps. What did it do? It retreated the entire way back. You were trading, the gap goes down to 190. You're trading at 192. If you think they're going to beat on the reduced revenues, look, the MACD is setting up. Doesn't look bad. But again, you have to understand Dick's model. You have to understand more about it. So let's go over here to Seeking Alpha, and let's look at some of the fundamentals on Dick's. It's a strong buy in the quant. It's got a valuation D+. It's ranked number 1. So, after doubling, a downgrade for Dick's Sporting Good is prudent. That's on Friday. So they're some of the Seeking Alpha analysts, the most recent ones, they're saying hold, sell, hold. Now, on Thursday, March 14th, that's March 14th. That's way back. That's too long ago. Much too long ago to take a look at that. Things have changed since March 14th. If you go back here and we look at March 14th, where was it trading? On March 14th, it was trading at $216. So you look at April 15th, and they're saying sell. April 15th, you can read that sell rating. April 15th, they're trading at about 196, where you are today. Not huge. If we look at Wall Street, we can see that, $220 is the average price target. That's a 14% upside. If we take a look at some of the revisions, 24 up on earnings per share, 4 down. Again, this is the last 90 days. This is since the last earnings. 15 up, 8 down. So you do have some downs, but you mostly have ups. And what are they expected to do? They're expected down. So they're expected down. $3.85 versus $3. 2.93 estimate on revenue. 3.88 on their last one. So take a look at that one. That one's an interesting one. Advanced Auto Parts is also interesting. They missed huge last time. And we can take a look at this stock, Advanced Auto Parts. You go over here to Seeking. Oh, I don't want Apple. I want AAP. You have to put in the right symbol if you're going to look at the stock chart. But here you go. Now, this back testing, this strategy loses you 25%, but you lose 63% if you buy and hold. This is a pandemic issue. Again, during the pandemic, this one during when we were getting back on the roads and stuff, people were just fixing up their car, and then boom, it just shot down. Now you're under your 200-day, your 50-day starting to move a little bit solid, but it still doesn't have confirmation. Do you want to invest in this one? If we go and we look at Earnings Hub and we look, 71 cents estimate, they reported a 59-cent loss. This could be an interesting one if they beat. The problem is you've got an increase in revenue, 2.47. They're expecting 3.43. I would expect it to get hurt. You've got Chewy, which I actually like, but the business model, a little bit expensive. They beat it by 550%. It's just, again, it's a kind of a broken business. ANF. ANF is an alpha pick from a while ago. ANF has killed it. They're expected $1.60, brought down. Now, if we take a look at the chart of ANF, you're off your all-time highs. I don't think it's continued its growth. Well, it has. I mean, God, this is just, the algorithm makes you 312%. Again, you make 573 over 2 years, 573%. You win 52% of the time. That's great. Your average win, 23%. This protects you against the downside. It has you in here at 114. Your average win, 23%. Let's take a look at ANF. If we're up 23%, we're up 31%. We don't want to invest in this one. MACD super high. RSI is at 75, but they have lowered expectations. Now, if we look at ANF here in Seeking Alpha, and we take a look at this, we can take a look. It's still a strong buy in the quant. So at some point in time, if you're over cologned and wearing a gold chain and you've got rips in your jeans and you're 52 years old and your gut, you're putting a roof over that shed downstairs. Yeah. I would invest in Abercrombie and Fitch. I don't wear it. I was cleaning out my closet. I guess I found some in my closet that I don't wear. But, I'm 53 going on 54. My ass ain't wearing Abercrombie and Fitch. I'm the jumpsuit jersey type. I am Mr. Tony Soprano. But that's reporting. Earnings estimates, there are two that, we have CRM, HPQ, Okta, Path. You can take a look at all of these and take a look. Best Buy is a good one. They move quite a bit. Canopy Growth, which is the marijuana stuff. But the two that I want to focus on tomorrow specifically, you've got Marvel, you've got Zscaler, you've got Sentinel, you've got Ulta. I've got a lot. The two that I want to focus on first is Costco. Costco reported $3.71 last time. Their estimate this time is $3.70. They reported $58 billion in revenue. They're expected $58 billion in revenue. Now, this stock has gone nuts. So if we go over to Costco here on the chart, this is one. I was pounding the table at $730. I bought a large amount at $730. Was I happy when I bought at $730, even though I saw it moving up here in April? And when it went down to $700, no, I bought more. So I've added during that down period. Did I add during this up period? No. Am I upset I didn't add during this up period? Yes. Yes, you're at all-time highs. The MACD, super extended. Algorithm makes you 51% on this over 2 years. Now, what's the average win? Your average win is 8.5%. This is up 12%. I've said it before. I want to sell this one as it weakens. It hasn't weakened. That's the problem. You don't want to get out of this when it's on a super run. Would I have gotten out of here at 769? Yes. Had it gone and lost its confirmation? Absolutely. Your Bollinger Bands are cinching up. They're contracting. They're moving in, and they're reporting on Thursday. So I don't know what it's going to do. I'll keep my eye on it. I don't think we're coming back down to this 720, but you can be rest assured that 730 is your support level here. It could come down that much. That is not a crazy move for a stock like this that has run. If we look at the weekly, this is just an extended run. So I completely don't expect it to come down. I'd like to get, I think I bought this in my my retirement account, so I'm okay getting rid of it. It's not a bad one. Now, the other one that I want to look on in the earnings hub specific. Oh, and we can go to Seeking Alpha and we can look at Costco. And Costco in the quant, I think it's a hold. And it's the valuation. I mean, do you want to pay that much for a Costco? Walmart's cheaper. Walmart's just cheaper. Target is significantly cheaper. Where are you shopping? I am not a Costco member, but my parents are. And I know, go into a Costco parking lot on a Saturday, you can't move. So let's take a look at the next one that we have. The next big one that probably is getting added to the core portfolio is Dell. And Dell is on par with SMCI when it comes to installing all of this NVIDIA gear that they are selling. We saw NVIDIA stuff last week, how much they're actually selling. Well, Dell is number 2 behind SMCI as far as putting in those servers. HPQ is far behind them. They report as well, but Dell is the one. This is at $163. This one has run up so much. I bought here at 110, 112, somewhere in this neighborhood. I bought during this downtime. I thought it was going to cover this entire gap down here to 95. It didn't. The new support level for this is 117, but I don't know that you're getting back to 117. You can see here where the MACD started coming down, we saw that nice pullback, and then you started to see it shoot up. saw a nice little pullback here, and then we started to see it shoot up. It has shot up. The algorithm makes you 230% over 2 years. Buying and holding, 267%. I would argue this is a buy and hold stock. This is like SMCI. But when we take a look at that 112 or 121, and we look, the average win is 11%. Where are you now? You're up 40%. 40%. So in my mind, I want to trim this. I really do. But we're in an AI market, and I'm reluctant to do that. So I will wait for the earnings. Am I adding more? No, but I'm waiting for the earnings. But I think Dell and Costco are the two interesting ones. There's a couple of others. You've got, like I said, Zscaler, Ulta, Sentinel. Ulta has just been hit hard. Consumer is not as strong as they were. We saw that with ELF even going into the short squeeze and stuff. But yeah, I just think it's crazy. Tomorrow you should look at a stock I've been looking at. This is D-Man from YouTube. We're onto the social request. Take a look at a stock I've been looking into. Wolf. Morgan Stanley said sector to look at was consumer, December financial and materials. I like Wolf. I started to notice unusual volume in the past. On top of it, this is Petco. And they do have like an insurance and a vet business, and they have been bouncing up. Do I like the business? No. I don't know what's going on with the stock. I am not a super fan of this this stock. The algorithm loses you 65%, but you lose 77%. I agree with you, D-Man. This had some crazy, unusual options. I think it might be a short squeeze. This is one that it's just kind of coming back a little bit. But is it worth it? Let's go over and let's look at some of the fundamentals. The algorithm's going to have a sell on it. It's risk of performing badly. There is nothing good about this stock. The valuation is a C. The reason it's a C, they're not making money. They're not making money. So I would worry about this one inherently. If it's a trade, I would trade it. Again, you can look at, even the 5-minute A+ setup on this one. If we go and look at it, we have some entries over this time. Now, you make 10% over the past 5 days with one position, and it's this position at 324. You made 10%, hasn't gotten you back in, and you're seeing weakness. Again, trading on a short time frame on a stock like this makes sense. It's not making money. Trading on a long time frame doesn't make sense because it could pull back significantly. Look at that 4-hour. It could pull back significantly. I just don't like it on the 4-hour. So there's that one. Damone Barteau, on Tuesday, could you look at Shopify? Shopify, in my mind, super disappointing. And I don't exactly know what's going on, although it is expensive. This is an expensive stock, but they are A+ in my book. Again, I think you come back up to fill this gap to 75, and then you fill this gap up here to 89. Right now, 80 is your resistance point. I do think that at some point in time, I don't know that it's going to be, in the next month, your RSI super low, your MACD getting ready to cross up. You could have an entry here. You see this entry right here. It has you in at 55. Let's see. This is, we're not in the 4-hour. We're going to go to the 4-hour right here. The 4-hour has you in. It has you out. Here it is, 58.79. You're at 56. It just hasn't. So when you're trading this one on the 4-hour, and I use this 9-day EMA right here as support. As resistance and support and confirmation. You haven't traded over this. So even though that 58.79 got you in, you haven't traded over it. It doesn't have confirmation. I would be looking to buy this at 60. At that 58.79, I would wait for a couple of candles. If we didn't move up, I would absolutely wait until that 60. So we haven't had confirmation. The MACD is moving up, but you're trading in this short range. The Bollinger Band's cinched up, getting ready to move, but we're on the downside of the 9-day. That would tell me we may have more downside. This is super, super disappointing for me. I do own a large position in this. It's not one of my largest in my portfolio, but I do hold a large position. And you can see the quant has it as a hold. And if we go over to the valuation and we look at this, the PEG, which is, Steve Kress's favorite thing, this factors in price per share and growth. It's at 1.31. It's 34% against the sector. But I argue momentum is where you want to look. And this has no momentum whatsoever. You can't get in front of a moving train and expect it to actually change. So what we want to do is we want to look at the weekly, and we can clearly see that 200-day is providing resistance. And so until you get above that 200-day, I think you can buy this, but that 200-day is going to be key. So your trading range right here, if you buy it at 56 today, you're going to wait for it to go up to 80. You could wait for it to go up to 68 because that's your 50-day and then sell it. Maybe that's going to provide some resistance. See this blue line right here? It hasn't provided a ton of resistance in the past. It provided a little bit of support here where you saw it bounce up back up to the 200-day. Your 50-day is starting to move a little negative. So do you want to add this now? I would say no. Earnings are behind us. Little bit iffy. But Damone, I would be a little bit concerned, but I do have belief. We have a good product, a good company with good management, decent earnings. We can go over to Earnings Hub and we can look at Shopify. Let's look it up. We're just going to look for Shopify because I want to show you the earnings were killer. I mean, they beat by 17%. They beat by 17%. They beat revenue by 1%. And you can see it's huge. They're expected to just not grow. That's the problem. The expectation is 20 cents. When we go over here to Shopify and we look at the revisions, and that's where, again, 15 up, 22 down, 22 up on revenue, 19 down. So you're really looking at them hitting a point where maybe they're not going to grow and their valuation is actually hitting them. So that peg is actually going to start coming down. Maybe that's what you want. And Joseph asked me to look for Shopify too. There's not really a pump in this one. Again, catalysts are hard to come by. They've gotten rid of all of their cost stuff and given it over to Amazon. I do think it's a good one. Sam from Facebook. Gary, would you mind looking at Chat? It's an AI ETF. It has some big names, but not sure it's worth the long term. So if you want me to look at Chat, the chart, it's an ETF on AI. If you're interested in AI and you want it, go and get it. Here, it's new. So again, you can't go back and test a bunch of this stuff. You make 40% if you bought it 12 months ago. It's just a year old. You make 32% in 11 positions. So it's about once per month. Your average win is 6%. So we talk about it a lot on this 4-hour algorithm. If the average win is 6% and where you're trading right now at 9%, I would say we probably have downside. You're probably looking at this 36, 93, 37 being your resistance. So buying in at 36, you're looking at a little bit of resistance because you're up here. Now for ETFs, it's one of those things. If you're looking at an ETF and you're looking at buying an ETF, then you want to go over to Seeking Alpha and you want to basically look at the holdings. The holdings are what you want to look at. Now, you go over here and you look, NVIDIA, Microsoft, Alphabet. Great holdings. But more importantly is what you want to look at, the expense. The expense ratio, 0.75. Your median on ETFs, 0.48. Now, if you want a different one that's got similar stuff, take a look over here. Now, you've got ones that are higher, 1.28. Magnificent 7, 0.29. SOXL, 0.76. This is a triple levered ETF. I wouldn't. Bots, 0.68. I would say you're better off for Chats, which is an AI technology. I mean, what's not to tell you? They've got 54 names. Just buy the top 10. Position your portfolio like the top 10. Say you were going to put $100 in here. I would go and buy $12 of NVIDIA. I would buy $10 of Microsoft. I would buy a little bit more of ServiceNow, Salesforce. Amazon, I would load up on. I would probably put 6% in there. Broadcom, I'd load up on. Oracle, I'd load up on. I wouldn't have those at 3%. I would have more of those at 6%. But just put, do the top 10 in your own portfolio. And it's $100 by fractional shares. Sam, I have no concept of actually, I look at ETFs as there's a few that I buy. If it has less than 50 names in it, I'd say 50 is your cutoff. Then I just buy the top 10. I mean, you're not diversifying yourself. This is an AI ETF. Just buy AI names. Your momentum, absolutely A+. Expenses D, though. Again, the expenses are super, super expensive. So, Shep, I've got a little over $915K across my retirement accounts. I keep about 80% of this in ETFs like VOOG, IVV, FTEC. I keep the rest available for trade. Individual stocks heavy. NVIDIA, SMCI. Is this an okay strategy? Shep, I mean, again, I am reluctant to give out my portfolio. And the reason I'm reluctant to give out my portfolio is because I think there's a lot of people out there who will just buy whatever I say because I'm successful. I am super, super successful, but I also hold 65% Apple. Was that successful this year? Hell no, it wasn't successful this year. So I don't want to be responsible for people buying just based on what I have. Now, is your strategy okay? For me, that's good. I think it's diversified. I think it's smart. Are you sleeping at night? Are you outperforming the index? The Qs? An ETF can't outperform its largest holding. And I'm comfortable. For me, I don't like a bunch of ETFs. So having 80% of my money in ETFs, even though those are low cost, very good ETFs, and I wouldn't knock them at all, I am significantly riskier. And I just went over, chat, I would take the top 10 holdings and just buy those. But I am going to, when we talk about, if you go over here and we look at the Qs, okay? You know what? I'll just do this. We'll go and look at the Qs versus VOO. Because what I want to point out to you is the difference of what you're going to deal with over a certain time period. And we'll change this and we'll select symbol and we'll go VOO. And then I am going to update chart. And then I'm going to look at metrics and I'm going to look at total return, not just price return. I want to look at total return because these include some dividends and we want to take that in. When I look at this and I say, okay, 3 years, I am dealing with 40% up. But look at that space. Now, if you can't deal with a 20% downturn because you were down 20% in 2022. You were down 20%. VOO was only down 6%. So I think it determines, if you take a look and we add in something like, NVIDIA. Let's just add in NVIDIA. Take out your VOOG and put it into NVIDIA. It's a totally different strategy. Oh, this is screwing up. Let me refresh real quick. Is this going to do? Yeah, there we go. Let's look at NVIDIA. And if we go 3 years, if you look at this, NVIDIA was down 23%, 26%. But look at the growth. Again, you can paint this with whatever you want brush, and you can take a look at the winners. But in my mind, if we get rid of NVIDIA and we look at that, if you're comfortable and you're sleeping at night and you like your portfolio, if you're not comfortable, then change your portfolio. But I don't think it's one person's, my Fidelity guy, Stuart, he told me, get out of Bitcoin, get out of GBTC, put something in my head. And I got out of GBTC. It's because his risk profile is different than mine. And I'm smart enough to know I probably shouldn't have got out. I probably should have done it. But again, you've got to talk about, what's comfortable. What's comfortable for me is not going to be comfortable for you. I don't think that's a bad strategy, but your performance, are you happy with it? If not, then change it. But I'm not going to, I'm not a professional. I'm not a money manager. I'm a guy who's just giving you tips on what I'm doing and what I'm seeing in the market and how my portfolio is performing. And I'm doing pretty freaking well. And you want to know how well I'm doing? If you want to know, then go to Savvy Trader. I've got a portfolio up there, a core portfolio. I've got a trading portfolio. I don't suggest people follow it. If you want to, you're more than welcome to. It's quite expensive. I support Savvy Trader for that reason. But if you want to look at the core portfolio, this is just 100 names, 35 names. What I do, when DELL goes in, I'll add 100 shares when DELL goes in. And it might be at an all-time high, but I'll just buy 100 shares. Now, what I do is I compare it against QQQ. Put your portfolio in here. You can't backdate it. And the reason you can't backdate it, they don't want this manipulated. And that's why I say I can't manipulate this. I can't manipulate the price. I can't manipulate the return. I can't. The return here, I made 38% in 1 year. NASDAQ, 24%. So these names, in my mind, are absolutely perfectly fine for an equal weighted portfolio. If you just want 100 shares of each of these, it's, the portfolio value is 982,000. So I'm not sure you actually have enough money to do this. But these are great names. The only one in here that I would say, hey, you don't want to own, you want to trade, is Roblox. Boeing has been a super disappointment. Might come out. Devon came out. Devon, since I pulled it out, has been on a super, super run. But again, you want to take a look at something like this, tracking your portfolio against the indexes. So while you say, hey, is that a great strategy? I don't think it's bad. It's your strategy. Scans, we can talk about scans. These are the ones, like I said at the beginning, that are bullish in the 4-hour algorithm. Meta is Facebook. If you don't think that Meta is going to absolutely kill it with, and cover this gap, that was a crazy, crazy drop. 478 is where it gets you in. Just got you out with a 5% gain. I got rid of my FBL. I might buy FBL again. FBL, it just has another buy-in. And why? Because Facebook has a buy-in. This is a 2 times daily levered ETF. I got out of FBL. Why did I get out of FBL? Because I was traveling for Mother's Day and I said, you know what? I don't want it. Got you out with a nice 7% gain. I'll probably get back in here at $24.08. We have confirmation. It's above that. We have a gap above it. But again, you want to make sure. FBCG, which is one of the ETFs that I suggest. This is Fidelity Blue Chip Growth. This is a killer ETF. Now, it's got some expense with it. This is one that, it's Blue Chip Growth. We can go and we can take a look at the holdings. Let's look at the holdings here. The holdings, NVIDIA, Microsoft, Amazon, Apple, Alphabet, Eli Lilly, Uber, Netflix. It's all stuff that's in the core portfolio. So, but it's a great ETF to hold. It's in the core portfolio, about 100 shares of it. Momentum A+, ranked 2 out of 79 in the asset class. The asset class is large growth ETFs. SPMO is number 1. If we look at FBCG and we go and we look at the expenses, this one's expense 0.59. It's not great. Median's 0.48, so it's a little bit expensive. Go and look at the peers. What was that number 1? Let's see. Let's look at SPMO. This is the Invesco S&P 500 momentum. This is the momentum. And we look at the holdings. You got NVIDIA, Apple, Microsoft, Meta, Amazon. This is momentum. So this is going to change. It's 102 holdings. So if you want, momentum, and we go and we'll look at the expenses, this one's a 0.13. It's even cheaper, but it's a momentum, different strategy. But again, this is how you can find it. Leveraged ETFs, AMDS. Now, this is an interesting one because this is the short of one time short AMD. AMD, we can take a look at AMD, but this is the short, 1288. Now it's at 1252. I would say you didn't want to buy this because MACD doesn't look super strong. RSI, not super strong. This is only out 9 months. Algorithm loses you 38%. But if you bet against AMD, you're down 50%. 50%. And we can look at AMD stock. This looks strong. Again, the RSI, in no man's land, it's at, let's see, almost overbought, 62. MACD above the oscillator, not looking bad. You're in at 155. It's clearly using that 200-day as resistance. But in my mind, again, with the NVIDIA sales and stuff like that, I think AMD is going to do perfectly fine. I own AMD. I own AMD at like 108, I think 105, 106. I think 90. I made a bunch of 90 and stuff when it dipped under 100. I believe in AMD. So those are the 2 leveraged ETFs. Again, if you want anything on this, you want to support the podcast, there are 3 basic links. You can tip me if you want through Venmo, through Cash App, PayPal, whatever you want. You can sign up for Visible. You can sign up for AT&T. Sign up for Webull, which is, I think, the best trading app on your phone if you want to trade. You can sign up for any, but the real thing are these tools. And the tools are on sale. And so take advantage of those sales. Again, Trendspider extended their sale. Seeking Alpha is 20% off. Free 7-day trial, by the way, on Seeking Alpha Premium. If you don't like it, you don't have to keep it. And then Alpha Picks. You don't get a free trial on this one, but it's Alpha Picks. And look at that performance. Again, if you want ideas, I give you all the ideas. And if you want to sign up for the newsletter, sign up for the newsletter. It's free. Okay, I've done an hour. I will talk to you tomorrow. Have fun. Take care.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.